My view is that there is no current coherent moment. There's no consensus now. There are kind of law and development activities that go in different directions. The whole thing is much less central now. I think if you went to the World Bank and you asked them, what's going on with law and development at the World Bank, it's less. I think that's my impression. But also it's splintered in different directions. So at the World Bank, for example, you have now these guys renamed themselves. And I don't even know what their new name is. It's Schleifer and Vishny and, yeah. Right, so these guys, for those of you, these guys produced those indices, the Doing Business report, and it's worth looking at them because they were very kind of, well, they focused a lot on law, but they did it in a very rigid way, and mostly because they weren't lawyers. They were mostly economists centered around Harvard's neoclassical econ department, and so I mean, the people 2 blocks away at the Harvard Law School were like, this is nonsense. But the people at the Harvard Econ department did not talk to the people at the Harvard Law School about how law actually works. But they made those elaborate coding systems to code legal systems all over the world. I'm sure Brazil. And this mattered because people looked at the rankings to, when they made decisions about directing capital, they would look at, where are we? I'm from Kenya, and I'm a government official, and I'm supposed to be worried. Where is Kenya's ranking on the Doing Business report? What can we do to move up the ranking? So that group, and they're still going. They were criticized very heavily for being too neoliberal, partly on labor. So one of their metrics was like flexibility of labor markets, which I think meant how easy is it to fire people, basically. So that was very political and considered anti-union. So the American Democratic politicians came after these guys, saying your indices, you're sitting at the World Bank. The World Bank is supposed to be politically neutral. You're sitting there and you're telling developing countries the way to get better is to crack down on unions. Stop it, or we're going to cut off your money. So this was quite heated in U.S. politics. And then on the other hand, in the World Bank, they have a lot of people who I think have turned to things like, comprehensive development, where it's sort of redefining the term development, because the term development can have many meanings, right? You can say development is just economic growth, or you can say development is something much broader to include human rights and, civil rights, human rights, the environment, sustainability. So the sustainability people, I would say, are kind of the opposite of the Doing Business people. And that's one of the interesting, difficult things about talking about law and development, because there's no single definition of development that people agree on. So if you think human rights protections are part of development, that's going to affect what your legal system is expected to do. Your legal system is expected, or labor rights, right? If you define labor rights as part of being developed, then of course your legal system has to protect labor rights. If you're the Doing Business group, you're concerned that labor rights need to be kept under control, or they make the system too inefficient, and so the debates in law and development often have roots in basic fundamental political debates about things. So my view about China's development model is that it's not that different from what other Asian countries did, especially the countries close to China, so Japan, Korea, Taiwan. So what is the key to that? I think a lot of it a lot of what the law and development literature said was necessary, just wasn't exactly correct. So people who do law and development work love to come up with recipes for what they say the legal system needs to do. So, and my papers run through part of that. A good one is corporate law. So if you these guys wrote a lot about corporate law, and their model of how corporate law should work was very much based on the U.S. It was that this core of corporate law and corporate governance should be the stock market, the publicly traded model. They were suspicious of family-held companies. They said that they'd say things like, well, deep, liquid capital markets, those are the key to economic activity. And things like minority shareholder rights, like it's really important for your economy that minority shareholders be able to sue. And so one of their indices said, minority shareholder rights protection index, stuff like that. If you look at East Asia historically, when it was developing at 7, 8, 9% a year, most of the companies were dominated by somebody. So in Korea and Taiwan, the companies were dominated by families, and they still are. I mean, Samsung, it's still the Lee family. Now, the Lee family has gotten bigger as the generations go down, and some of the shares are traded on the stock market, but not enough to fundamentally change the governance. And in Taiwan, they're also family corporations, but they're not the same as the Korean ones. So the Korean ones are organized as basically these hierarchical, the chaebol is what they call them, a hierarchical family thing where there's a center holding company or something, and then everybody's all cross-shareholding. The Taiwanese companies like Foxconn are also still controlled by families largely. That guy, Terry Guo, he's the boss of Samsung, which is a giant company. But the Taiwanese business groups are much more diffuse than the Korean ones. So if you try to map out the relationships between all the different Foxconn affiliates, it might not even be possible legally, because sometimes it's family members who own the other one, and the connection is just a family relationship. It's not like a legal shareholding relationship. So my takeaway, and Japan had moved beyond that. Japan, the business groups before the war, the Japanese business groups had been like the Koreans. There were families who ran Sumitomo and Matsushita and Mitsui and all that. The Americans, after the war, we broke those up. But the Japanese business groups were no longer centered so much around families, but they were centered around banks. So they had this, like the main bank system. So you look at that, if you know something about comparative law, if you know something about law in Asia and corporate law, you'd say, well, none of these, Taiwan, Korea, Japan, none of these fit the doing business group model. Minority shareholder rights in Korea were nothing when I was a lawyer there. Nobody sued that. You bought shares to sell them for more, right? You bought shares to participate in the stock market. You didn't buy shares as a minority shareholder to engage in corporate governance. So none of them matched the model, but also they were all different. So it wasn't possible to recreate. I was not going to try to recreate an Asian model of corporate governance, because if you looked at the countries, they were all actually different. They were all this sort of, the formal law itself was kind of German system, but then with American content. Sometimes, like the Japanese corporate code was copied from Illinois. So at some point, maybe in the 1950s, they imported the Illinois corporate statute and translated it into Japanese. So, so what do you do with that? I mean, what I thought you should do is you should have a kind of a humble attitude about law and development. Like if you know that about the history of East Asia, and they've been the most successful development stories in the late 20th century. So what does that mean? You know, it means a lot of things a lot of legal structures can support economic development. And you don't need fancy corporate law. You don't need fancy stock markets to support economic growth, at least in a developing country, right? Maybe at some point it's important to have Delaware-style corporate law or whatever, but at the early stages, it just doesn't seem to matter. So, yeah, question?
Yeah, I was curious about how the development of Hong Kong fits in this framework. Because Hong Kong now, if I understand correctly, it's like a hub of financial activity.
Yeah.
And I'm curious about how this gets to be.
I mean, Hong Kong, hello, Hong Kong, what to say about Hong Kong? Well, Hong Kong, I think the one reason it's becoming such a hub now is the mainland government, you know, a lot of Chinese People's Republic company, PRC companies are listing in Hong Kong. And that drives the activity on the Hong Kong Stock Exchange. Hong Kong was, you know, the regulation was basically more British. And so London has been a financial center for a long time. The London stock market, when I was younger, it was London, Tokyo, and New York were like the three stock markets that really mattered in the world. London has kind of lost a bunch of that. So the British are actually trying to figure out how to get London back to being a financial center. Because it depends on getting people from around the world to come and list their companies in London. The Asian countries, the East Asian countries, foreigners didn't really go to Tokyo or Korea or Taiwan to list. Those were never really financial centers. Tokyo was kind of, but I think that was just because the Japanese corporations were so successful, and the Japanese corporations listed in the Tokyo Stock Exchange. But I don't think it was ever really a global center in the way that New York or London was. And Hong Kong, I think, I mean, Hong Kong may lose that, I think. I mean, the Chinese government's position matters a lot on this issue. You know, China opened stock markets, and this is an interesting story. China opened stock markets in the early 90s before they even had a corporate law. So what are you trading? What are you trading on the stock market? You're trading stocks, but you don't have a basic corporate law to define what a stock is legally. But, you know, this is part of the story of the Chinese development model. It's you try these experiments first, and if the experiment seems to work, then you build the legal system to support the experiment. So the experiment starts with some, like I mentioned the other day, like some normative document. Some government office will write a couple pages of document, and that will create a stock exchange. So I don't actually know. It may have been even the city government in Shanghai who wrote the regulation creating the Shanghai Stock Exchange. But, I mean, what they did was they took an old hotel in Shanghai from before the revolution, this beautiful old building in downtown Shanghai. They took the lobby and they just opened the stock exchange in the lobby. So they put up the lights where the stock prices go around the room like that. They put that up, and they put up some trading windows, and they started a stock exchange. And that was in the early 90s. What were people trading? I don't know. They were trading something, and the trading spilled out on the street. You could see people out on the street like trading by hand. So, you know, one of the interesting questions is whether Hong Kong will continue. Some people think, well, the mainland government actually wants Shanghai and Shenzhen to be the financial centers because they're really in China. So if the Chinese government pressures Chinese companies to list in Shanghai and Hong Kong, or Shanghai and Shenzhen, that will kill the Hong Kong Stock Exchange. Or not kill it, but it'll just become much less important. But maybe that's not true. We don't know. I mean, because nobody knows what the Chinese government's going to do.
But about the development of those corporations or the also was like Japan or
The big Hong Kong companies were family dominated. Yeah, and a lot of them were, I mean, Hong Kong's a funny place. Milton Friedman loved Hong Kong because he said there were no tariffs, it was a duty-free, you know, whatever. But the government was able to fund itself partly by selling land. The government in the British, you know, system, like still, I think in England, the Crown owns a lot of England, and you don't get complete title, you get a 99-year lease or something like that. And Hong Kong was a little like that. So the government didn't need to fund itself like a normal government through tariffs or through taxes. They could fund it by doing periodic land sales to these giant land companies. And if they were traded, it was not enough to affect the corporate governance. You know, but Hong Kong was relatively free of corruption. The legal system was British, common law stuff. There was a commitment to corporate. People knew corporate law, and until the handover, if you appealed from the Hong Kong courts, eventually you could appeal to England and you could appeal to the Privy Council. So they were in the hierarchy of British courts because it was a colony, and that's how the British colonial legal system worked. So if you look at a bunch of other areas of law in East Asia, they also don't fit the general recipes that come out of the law and development world. So on either side, so like if you're a Hayekian and you try to say, well, the Asian countries, their economies were so successful because their legal systems were this kind of Hayekian thing. You say, well, in private law, Korea, Japan, Taiwan, in private law, they all had their legal systems in place before rapid development. So if you're trying to think what caused what, you could say, well, their kind of German-American legal systems were in place, and that was really important for economic development, property rights, contract enforcement. And this happened because Japan had imported a German-style legal system, and they had imposed that in Korea as a colony, and the Koreans didn't really change much after they became independent in the 50s, or in 47. I mean, so essentially the Koreans have a German legal system that they got through Japan, basically. And Taiwan, like I said yesterday, Taiwan had been developing a European-style legal system on the mainland before 1949, and when they fled to Taiwan, they took that with them. So they have also a kind of Germanized legal system. So if you're interested in comparative law, this is really interesting. You have these three countries in the region that all have these kind of German hybrid legal systems. But the way property rights and contracting worked in practice, there was a lot of informality. Or a lot of things, as I talked about, I guess yesterday or last night, a lot of things were done in a very informal way. So Americans tend to think that if you want clear property rights, you have to write a very long, detailed contract to spell out all the contract possibilities and whose responsibilities. You have to spell it out all very clearly. That's how you get clarity and clear contract rights and whatever. The East Asians, a lot of stuff was done with very short, simple contracts. And people tended not to sue. The rates of litigation were always very low. Nobody knows exactly why. You know, it could have been partly cultural. It could have been partly that the legal system itself was not conducive to litigation. But either way, the story is complicated because these countries, you know, developed rapidly, and people were still doing business with more emphasis on relationships and things like that. And it's kind of a stereotype, but it's also kind of true, I think. And you know, and maybe that's something you outgrow at some point, right? That might be the kind of thing that works okay when countries are at an earlier stage in development, but at some point you can't operate that way anymore. Yeah.
Do you think this can be related to social or interpersonal trust. Because I read in a book of Lana Plants that contracts, they exist in order to overcome issues of trust. If you don't trust a person, then you need a contract.
Right.
I was thinking those terms that I don't know enough of the culture of those countries.
I'm not sure I would say trust exactly, because the business is tough, but I think there's often some way to resolve disputes without going to court. So, and this happens a lot in China. So in China, people will, if you find a government official at a higher level, you both go to, and you both sort of know that person, then you let that person resolve your dispute. In Korea is a pretty tight society. People know each other. The business people all know each other. And, it's not that they really trust each other. People compete viciously against each other, and in Japan too. But they figured out ways to resolve disputes just with less litigation. And this is a really interesting subject to study. It's a sociological kind of inquiry. The legal system doesn't tell you. What the legal system can tell you is litigation was discouraged by the legal system also. So, like, for example, court costs were set according to the size of the claim, which is kind of irrational, because the costs to the court don't really change. Whether you just add a couple zeros to the numbers, you get a bigger claim. The court's job remains basically the same. But they discouraged high claims because you had to pay that, and you had to pay it up front. So that discouraged enormous damage amount claims, because you had to come up with a higher amount up front. So, and what else did they do? Oh, there was limited civil discovery. So I don't know how much the American term discovery. In our system, if you sue someone, you engage in this process before the trial. You exchange documents, and we call that discovery. And if I'm suing you, I can ask you to give me a whole bunch of your internal documents, and you can ask me to give you a whole bunch of my internal documents. The court oversees the discovery process. We have very aggressive discovery rules in the US, and civil law countries in general don't. And I think in Asia it was even less. Like, you just couldn't get documents out of the other party. So that kind of discourages litigation too. I mean, one of our litigation terms is fishing, right? You go fishing, right? Because you don't know what the other guy has, but you sue, and then you use the discovery process to try to get some evidence that you can use. There was almost no civil discovery in Korea, so that just changes the picture. And it changed it in a funny way, like intellectual property cases. If you don't have discovery, it's very hard to prove things about who infringed the intellectual property rights. It was also very hard to get an injunction. So in the US, if you want to sue someone, you can go to the court and ask the court to issue an injunction ordering the other party not to do something. And it's a kind of common law thing. I think injunctions have been brought into the civil law tradition more, but in the common law tradition, the courts have a lot of authority to issue injunctions, sometimes with only one party. Sometimes you can go in with just one party and ask the court for an injunction. In the area of intellectual property law, like piracy, if you can't get an injunction, the party that stole the software will just erase all the software that they stole. right? If you sue them, if you start a lawsuit by filing a document, the other party finds out, they'll just go erase all the software. So then how do you prove that they stole your software? You'd have to seize their computers and things. So when I was a lawyer in Korea, we were always fighting with Koreans about intellectual property protection. And one of the things the Americans always asked for was they asked the Korean courts to issue injunctions telling the Korean parties not to delete the software, the pirated software. But the Korean courts were not comfortable issuing injunctions like that. They didn't like to do it. And they relied on kind of civil law ideas about we don't have the authority to issue injunctions. And so the Americans were always pressuring the Korean government to get the Korean courts to start issuing injunctions to preserve. The injunction is to preserve evidence before the trial really gets going. And so what people did was they would try to turn these civil cases into criminal cases by, instead of like a civil lawsuit over, you didn't pay me for the software and whatever, I'm suing you in contract or copyright, they would try to turn it into a criminal violation because the prosecutors were super strong. The courts were, the normal civil litigation process was kind of weak in East Asia, but the prosecutors were super strong. The prosecutors kind of ran the countries in certain ways. So if you could get the prosecutors interested, the prosecutors would go in and physically invade the other side's office, and they would get documents because it had become a criminal matter, and the prosecutors had the authority to go take documents. And this was a big problem because the prosecutors, there was corruption. It was like a human rights violation almost. Turning a civil dispute into a criminal matter is not a good thing for a legal system, right? And Korea still has problems with the prosecutors now. I mean, even Korea's been a democracy since the 80s. So it's a long time, but they're still having problems putting the prosecutors back under legal control because the prosecutors, in the authoritarian period, the prosecutors were the ones with the real power. I mean, the authoritarian leader had the real power, but the authoritarians used the prosecutor's office to implement their power. So that doesn't fit anybody's model of law and development. That's like a, So anyway, if you look at those countries outside of China, Korea, Taiwan, Japan, how they developed, what roles law played, you get this very mixed picture. And then if you look at China, it just gets worse, right? You look at China, or better or something, it gets more confusing. You look at China, and they didn't have any kind of legal system in place prior to economic development. So then you can pretty much rule out law as a prerequisite to economic development, right? As I said the other day, and like with the stock markets today, right? They decided they wanted stock markets. They created stock markets, but they still didn't have a corporate law. With foreign investment into China, Korea, Taiwan, they had commercial codes. So if they wanted foreign investment, they could just let the foreigners come in and operate under the commercial code, do M&A, form new companies, all that kind of stuff. They didn't. I mean, the East Asians outside of China and in China later, they always regulated foreign investment. So the markets were never free to foreign investors. On the other hand, they wanted foreign investment. They just wanted to control it. And that kind of goes to the public law aspects of the legal system. Then public law could say, well, it's really important that the state be controlled by public law. It's very important that you have administrative law to require transparency and judicial review and all this stuff. in Korea and Taiwan and Japan, they had statutes that allowed you to sue the government in administrative action. So they were called administrative litigation law, and they were very short little statutes. They just said, and they were from the 1930s. Like this, they had these statutes for a long time. It's a German model. It basically just said, if your rights have been infringed by the government, you can sue the government. So it just created a cause of action, which I guess in the civil law world is necessary. Otherwise, you couldn't do it if there weren't some little statute saying you can do it. So in theory, if you applied for a license to import something, or if you applied for a license to get foreign exchange, or if you applied for a license to import technology, or if you were a foreign investor, if you applied for, investment permission, in theory, if you didn't get it, you could sue the government, and you could force the government to behave legally. In practice, nobody sued the government. In Korea one time, we had a client, and they were having trouble with the Ministry of Finance. And being a good American lawyer, I go find that statute, and I say, look, yeah, it says here we can sue the government. And I went in to talk to my boss, who had been a judge, and he was an arbitrator at that point. He said, in Korea, nobody sues the Ministry of Finance. You don't sue the Ministry of Finance. Why? Because the Ministry of Finance, you need all kinds of permissions from the Ministry of Finance. You can't do business in Korea if the Ministry of Finance is upset with you. So that's not how we solve problems in Korea. We don't. Yeah, they're out of luck, as we say, right? That's the problem with it, right? If it was a hard system, right? If you didn't have, and not only wouldn't your clients wouldn't want to sue the Ministry of Finance because the Ministry of Finance controlled the banks, and if the government got really upset with you, they would just shut off the banks and they wouldn't lend you money anymore, and then your company would collapse. And that's related to the doing business people. The doing business people, they said stock markets are really important. You need stock markets. Korea, the government had to force companies to list their shares on the stock markets. The companies didn't really want to have their shares traded on the stock market because they didn't want minority shareholders. So the companies and the companies and the government and the banks all kind of worked together, and they were very bank-centered financial systems. But what that meant was that if the government got really upset with you, they could just turn off the money and they could destroy your company. So it was not a human rights, it was not an ideal kind of human rights situation at all. And the other thing is the lawyers didn't want to sue the Ministry of Finance. Like my boss, he probably thought, well, our client will have trouble if they sue the Ministry of Finance. But also I, as a lawyer, I want to have a good relationship with the Ministry of Finance because I have other clients that need permissions from the Ministry of Finance. And it's not just the Ministry of Finance. I mean, there were ministries that dealt with like import permissions and technology license permissions and all that kind of stuff. Foreign exchange dollars were always scarce when they were developing. So if you could get dollars, that allowed you to do certain things. So you needed permission from the government. So both the businesses and the lawyers had incentives not to actually use administrative law to sue the government. And at the constitutional level, these were authoritarian systems. So if it really came down to it, your property rights didn't matter. Like there was a famous case in Korea where the government in the 1980s destroyed one of the Korean business groups. It was called the Kukje Group. The international group was the English translation, Kukje. And Kukje was they weren't as big as Hyundai or Samsung, but they were pretty big. And the president ordered the banks to stop lending to Kukje. And the business groups were always in debt, right? They used debt to finance their activities. So the government destroyed the Kukje group, and then the government took the pieces and gave them to the other business groups. So Hyundai and Samsung and Daewoo and whatever, they broke up the pieces of the business group and gave it to other chaebol. And people actually don't know why exactly the president did that. There was some crazy story that the president's son, it was his birthday, and the chairman of the Kukje group didn't come to the birthday party or didn't give a nice enough present or something like that. But nobody knows. That seems ridiculous, but I've never heard a better explanation. I mean, maybe, well, elections, the political system was liberalizing at that time in the late 80s, so one theory is that the chairman of the Kukje group was giving money to the Democratic challengers, and that's why the president broke up the Kukje group. But what that means, the lesson from that is that, you know, at the highest level, property rights, they ran out if it really came down to it, you know, and which is kind of the definition of authoritarianism. I mean, you can have a constitution in an authoritarian system, but at the end of the day, judicial independence doesn't rule. You know, the ruler will apply the constitution. So, you know, then you turn to China, and all this stuff is even more dramatic. Their lack of a legal system before development, the minimal stuff, the minimal legal reforms that they did were able to kickstart economic development. And then in the second paper I wrote about the legal historian Willard Hurst, the similarities to the US in the 19th century are really interesting. You know, the 19th century was our rapid growth era in the US, and our legal system didn't play a very formal role. I mean, all sorts of things happened that were kind of only loosely related to law. And so our legal system, you know, kind of developed a little bit after our rapid economic growth. So do you have a question, comment? And Hurst, Willard Hurst, this guy, very interesting. His idea, he wrote this book. It's a little book. It's Law and the Conditions of Freedom. And Hurst, you probably didn't read the paper, but Hurst invented modern legal history in the U.S. as a approach to doing legal history. And it was social legal history. He didn't, you know, traditional legal history was kind of like traditional comparative law. It was very boring. You would study either famous lawyers, so you'd do like biographies of famous lawyers, or famous Supreme Court judges or something, or you would just trace the doctrine over time. So in a common law system, because the legal rules many times are developed through case law, you can do legal history by just describing the change of the legal doctrine, which is also very boring because it doesn't say why the legal doctrine was changing, or, you know, the causal thing is not necessary for that. But also, like, who cares? Like I said yesterday, who cares if the Germans create contracts this way and the French create contracts that way? Who cares? What difference does it make for real life outside the legal system? And so you could do this kind of internal legal history work. And Hurst's contribution was to say, well, I'm not going to do that. I'm going to try to do legal history that's connected to social, political, economic history outside of the legal system and connect those. So, like, what's causing what? Does legal change cause social change? Or does social change cause legal change? Or is it both ways all the time? Is it, you know, multi-causal, whatever? So, and now everybody does that, right? Nobody would do legal history the old way. But Hurst was very interested in economic change in the U.S. in the 19th century. And his big idea, which I think he kind of borrowed his big idea was that the most important lesson to take out of American legal history in the 19th century was that the legal system functioned, it was functional. What did the legal system, how did it function? It functioned to release energy of people, to release the energy of the people who then carried out all the economic activities. So, and I think he kind of borrowed this, you know, Keynes talked about the animal spirits of markets, that why do capitalists do stuff? They have these animal spirits of, they can't stop themselves. They want more money, they want to do stuff, that's, you know. So Keynes talked about animal spirits. Schumpeter talked about creative destruction and entrepreneurship. This economic historian, Alexander Gerschenkron, who was a little later, but Gerschenkron wrote about late developing countries. Gerschenkron wrote about stages of, I guess, capitalist development. So the first industrial revolution was England and Holland, and then Imperial Germany came later. But Imperial Germany, because they came later, the role of the government was different from the role in England and Holland. Anyway, Gerschenkron, so all these ideas were in the air, and I don't, and Hearst cited some of them. He cited Gerschenkron, he cited he cited Schumpeter, he cited Keynes. But I think this release of energy idea is important for law and development because it kind of says every country is going to have a legal system, and the economic problems facing any country at any particular time are specific. So if you accept Hearst's idea, then the question becomes how do you tweak or adjust your legal system to release the energy of the people who will do things, the market actors who have to do the things. And he didn't, he was trying to be somewhere in the middle between the state-centric people and the total free market people. So he was trying to say, well, sometimes the role of the state can play a positive role by helping to release energy. So, like with property rights, one of his examples was property rights. Like, if you had a situation where a few people owned all the property and they were just sitting on it, like feudal England or something, it would be a positive role of the state to do land reform, to break up the landed estates and create small farmers and so land reform would kind of fit. It would be a positive action of the state. The state would have to use law as a tool to do land reform. But the effect of it would be to release the energy of a whole bunch of farmers who would now own their own farms and invest more in farming, you know. On the other hand, the state, I think in his vision, the state doesn't really do the economic activity. You know, so he definitely wasn't a big, I mean, and he was looking at U.S. history, and he was saying, look, this is what I see. He didn't see a lot of state ownership in the U.S. history during our rapid growth period. In our country, the state doesn't own the railroads, or it didn't, right? The railroads developed privately. Electricity developed privately. Our model was to have these things owned by private companies, and then the state would try to regulate them, which is different than, say, a lot of European countries. The state owns the railroads, and the state owns the telecom system, stuff like that. That's not what we did, and it sort of worked. And if you look at China, you can say, well, a bunch of stuff they have done kind of fits this model. So in my paper, I have a bunch of examples. I talked about land reform, so last time I said, well, one of the early Chinese economic reforms in the late 70s, early 80s was to allow farmers, they were still part of the communes, but if they grew extra crops, they could sell those extra crops on the free market. So it was a way to encourage the economic activity of the farmers, to say basically, you have to meet your quota to the government of whatever, vegetables or rice or whatever, but if you grow more than that, then you can sell that for cash. So we're going to allow both. We're not, and this is a comparative thing. It was unlike Eastern Europe where they did big bangs and whatever. China allowed the private sector to grow alongside the state sector. And over time, that relationship has kind of shifted. But there was no radical, China has never really done radical economic reform. But that you can see that in Hearst's view. All China had to do to release the energy of the farmers was to make this little policy change. It didn't require much of a legal system. It didn't require clear property rights and constitutional law and all this stuff. It didn't require lawyers. It just required the government to sort of say in some policy document, okay, we're going to allow this. And they started on a small scale, right? People who study Chinese economic history know there was some county somewhere and there was some official who did it, and they know who that is, and that official had to get, somebody in Beijing had to say, okay, it's okay for you to try that experiment in the countryside in some county, and if that experiment works to increase agricultural productivity, then we'll let that experiment spread. And then in the cities, they started, as I said last class, they started allowing people to quit their Soviet work unit and go into private business. So they didn't get rid of the work units. They just allowed some people to leave them. So the work unit system, that work unit economy still existed, but it became less and less important. And then the private economy rose up beside it. And again, that didn't require much of a legal system. So what else did China do? One of the most interesting ones, and this I think is really actually super important. The government officials, because they're basically all party members, there's a party, they call them cadre evaluation, the cadre evaluation system. Cadre, that's a term from Soviet English. The cadres are the people, the Communist Party officials, we call them cadres or cadres. I don't know why we call them that, but that's what we do. So the cadres are the Communist Party officials, and they have their own bureaucratic system, and they get evaluated all the time. And if you want to move up in the Communist Party cadre evaluation system, you have to meet the metrics. They have metrics. And what they did was they made economic growth a key metric for people to rise up in the cadre evaluation system. And it was not sustainable development, blah, 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 human rights, nice things. It was like GDP growth. How much growth occurred in your district last year? Was it 5%? Was it 6%? Was it 10%? The higher the number, the better you scored on the cadre evaluation system. And you do that, and everybody, people follow incentives, right? So all the officials all over China wanted to start, they got growth as the focus. And it was not sustainable growth, it was growth. Now you could get in trouble if there were also big demonstrations. So if you were so hard on the workers that they rioted, that was bad, because Beijing doesn't like riots. But if the workers didn't riot, then you pushed growth as much as you could. And because it's a competitive system, right, not all the cadres are going to move up the pyramid. So they're competing with each other. So what they did is they unleashed competition across different parts of China to who could generate the most growth. And of course, this was criticized. once people figured it out, they said, well, that creates bad incentives, right? Some people said that. It depends, right? It creates an incentive to foster economic growth. On the other hand, it creates incentives to ignore pollution. It creates incentives to, take bribes from businesses. It creates a bunch of perverse incentives. But it also creates an incentive for growth. And the other thing that they did this with was approval of foreign investment. So they decentralized the approval process for foreign investment proposals. So like in Korea, Japan, Taiwan, foreign investment tended to be controlled by the central government. If you wanted to build an auto factory in Korea, it was the central government, the ministry of whatever, that would approve your application, and the president and everybody else would know. In China, they decentralized foreign investment approval, spread it out to the provinces and even the cities below the province level. And of course, because those lower level officials were being evaluated by economic growth, they then competed for foreign investment. And the other thing that the government did was they set a dollar amount. So if the foreign investment was too big, it had to go to Beijing for approval. But if it was below, and I think the number they used first was like, I think it was like 300,000 US, maybe. Something like that. I can't remember the number exactly. But anyway, they set a dollar number or a renminbi number. So what did the lawyers do? The lawyers didn't want to have to get approval from Beijing. They wanted to be able to get the approval from the local government. So they would take the foreign investment project and they would cut it up into pieces that were all smaller than that amount, and then they would do those separately at the local level. So, lawyers are creative. That's what they do. So it's not hard to take, if you're saying, well, our investment will be to build an auto factory. If you looked at the whole cost, it would be too big. You'd have to get approval from Beijing, but you could figure out a way to write the contract so that it was divided up into pieces that were smaller, and then they could just be approved by the local government in Shanghai or Tianjin or whatever. And because those local government officials were competing for foreign investment, they would go along with that kind of stuff. There was like a happy relationship. For a long time, there was a kind of happy relationship between local government officials and foreign investors. And this was very pragmatic on the part of the Chinese government. There's a lot of pragmatism in the history of their behavior. Like they knew about this dollar amount. They knew the problem. It was not a secret that people were dividing up their projects and investing separately to get below. They created the cadre evaluation system. So the Beijing leadership knew that they had unleashed these forces at the lower level, and they knew that would lead to corruption, right? If your job evaluation depends on having private companies doing stuff in your district, it's very likely that you're going to end up in a kind of friendly relationship with those companies, which would lead to corruption and everybody knew all that, but the government's commitment was to growth. And this is I'll finish here, but this is consistent throughout Northeast Asia. It was export-led growth. So the older sort of what you would call the dependency theory critique, which I think has been stronger in Latin America than maybe anywhere. The dependency theory stuff, my take is that the Asian governments looked at the dependency theory critique and they said, yeah, that could be true. As a factual matter, it's true that developing countries are weaker than developed countries. That's just kind of true and obvious. And the international system isn't fair. but life isn't fair. And so why would we expect the international system to be fair? Nothing's fair. Our task is to get out of the bottom of this and move up in the system. So, this famous guy, Wallerstein has this world system stuff, and he has, like there's the core, and there's the semi-periphery. I don't know if you've read Wallerstein, but yeah, and then there's the periphery. And this is Waller, L-L-E-R-S. I think it should be pronounced Wallerstein, I think. And this is called the world systems approach. Oh, yeah, we call him Wallerstein because we have a bad accent too. We call him Wallerstein. Yeah, that's it's world systems theory, right? And world systems theory, it's basically just Marxism applied to the global system. It's like they're capitalists and they're whatever. This is very closely related to dependency theory, right? Dependency theory people said, well, the countries in the periphery, the system isn't fair. The countries in the core are not fair to the countries in the periphery, which is kind of true. I mean, but I think the Asian countries, my response to this is they said, yeah, as a description of the world, descriptively, this is pretty accurate. Our job is to get out of the periphery and get to the semi-periphery and then eventually get to the core. And the way to do that is through export-led growth. If you de-link, like some of the dependency theory people talked about de-linking from the global system, you're not going anywhere. You don't get rich by de-linking. It's not easy to get rich, but the only way to get rich is to engage in export-led growth. That's the only way to move up in this system. I think it was the conclusion. You could say that was incorrect, but I think that was, as a matter of fact, that was the conclusion of the Asian governments. So, and you say, yeah, Wallerstein's he's sort of correct. The world's not fair. But we don't want to be in the periphery. We want to be at the core. And so how do you get there? You can't get there exporting soybeans. I mean, that's what they would have said. So countries in Latin America now dealing with China, for me, the interesting question will be, what kind of economic relationships will developing countries get into with China now? Now that China wants to be this big player in the world and they have the Belt and Road Initiative and China's doing this stuff all over the world, what kind of relationships are going to result? Will China import manufactured goods from Brazil, or will China only import soybeans and iron ore from Brazil? We don't know. I mean, it's kind of early. And this is why the Asian countries were quite careful about foreign investment. They knew they needed foreign investment because the foreigners had the technology and the foreigners had the supply chains. So the only way to do export-driven growth was to get foreign investment. But they were always very careful about it. Morning. China was actually more open than the Koreans or the Japanese or the Taiwanese. China allowed a ton of foreign investment and became super integrated into, especially the U.S. economy. And I would say Xi Jinping, one of the things about Xi Jinping is his push has been to make China more autonomous from the U.S. His push has been to try to separate China from the U.S. And he's been open about this. So, and this is part of the reason the relations are bad. China, they announced this thing, they called it Made in China 2025, I think was this was a big program of the Xi Jinping government. They published papers about it. And basically it was saying, yeah, we import stuff from you now, but we want to stop. We want to not import semiconductors from you anymore. We want to develop our own semiconductors, and so that we'll be independent of you. And they kind of did it with everything. I mean, this Made in China 2025 thing was very broad, and it was not a neoliberal model of globalization or whatever. It was very nationalistic, and they're very serious about it, and they put a lot of resources into it, which is their choice. I mean, it's China's policy, but I think the U.S. especially and the Europeans reacted kind of badly to this. They said, well, why should we support you if you are trying to become more independent from us? So anyway, so questions, comments? We're kind of out of time, I think. We're at the end. And so Friday, we're doing something different. Luciano emailed me. He wants to do something different on Friday. So tomorrow will be the last day for this thing. And I think we should just have a free discussion tomorrow. I mean, I'm very curious what's actually going on the ground with trade, you know, U.S., Brazil, China kind of stuff. And you people know more about it than I do. I mean, I know some things about it. You know more about it, or certainly different angles on it. Like I was surprised that Brazil, I was told, allows Chinese companies to operate a lot of infrastructure, like electrical generation and stuff. It's one thing to allow people in to build it. It's another thing to allow people to operate it. China would never allow foreigners to operate something like that in China. So it's interesting why they would want to do that here. Are Brazilians okay with it? What are the implications of that?
I think that natural resources also, but maybe rare earth. I don't think.
Yeah.
I think that there is some Chinese company operating on that too.
The rare earths?
I think.
Yeah, I'm sure. Well, I'm sure there is. I mean, they've had. So in the reading stuff, if you get the reading materials, they were for Friday. So tomorrow there's a study of the Belt and Road Initiative. So there's a kind of think tank study of Belt and Road, evaluating risks and whatever. And then I just had some newspaper articles for discussion. And one of the newspaper articles is a history of China's drive to independence in rare earth minerals. And which is not new. It's been going on for like at least 20 years. Since the 1990s, apparently, the Chinese government thought we need to develop our own capacity in rare earth minerals, and now they control like 90% of the market. So
I'm actually reading from news here that last month, the state company of China mining metals bought a nickel mine in Brazil, a private nickel mine. There is a lot of Chinese influence here in Latin America.
yeah, and I don't want to say it's bad. I mean, you don't want to be racist about this, but you also want to be like honest. Is this a good thing or a bad thing? Yeah, and right. And you know the way foreign investment always worked in China was foreign investments were always screened by the government. So you know so the one question is, does Brazil still do screening of foreign investment? I'm sure the Brazilian government has a screening mechanism for foreign investment projects, and then are they making good decisions about what kind of foreign investment they're getting? So anyway, I'm like this. Any more questions? We're sort of almost done. Any more questions? Yeah.
I read some criticism about the Belt and Road Initiative, especially in European countries, because China kind of builds infrastructure, but contractually institutes debt trap.
The debt trap
Yeah.
argument.
So
Yeah.
later on, the country has the infrastructure, but it no longer has the property over it.
And if they don't pay back the debt,
If they don't pay back
the
debt,
the Chinese,
they
yeah.
lose the property.
Yeah, I mean, so on those things, I'd say two things. One, some of those arguments can kind of sound racist. Like, I'm not saying that, but the Chinese are doing this and that. So there's that thing, and then, yeah, and then people talk about that to criticize their own governments sometimes. People are trying to study this. So the paper I gave you for the reading for tomorrow, it's by a think tank in the US, and they're evaluating, it's a sort of evaluation of Belt and Road, and there's some examples. And they also try to develop like a checklist of things to worry about, which may or may not happen, right? So the debt trap thing would be one of the things to worry about. What are the terms of the loan? Can the country pay them back? If they don't pay it back, what happens? Will China renegotiate, or do you lose your port, for example? And sometimes this sounds like a big conspiracy, like the Chinese government, like Belt and Road is some giant conspiracy.
But at the same time, they are infrastructure in
Right.
countries that didn't
Right.
have it.
And as an American, one response I have is, well, if we don't like Belt and Road, then we should get back engaged in the developing world with infrastructure projects. I mean, or other Asian countries, Japan. I mean, Brazil and Japan have a long history. Japan likes to build infrastructure, and they and China compete, and so like building subways in Indonesia, I mean, or trains in Thailand, high-speed rail. I mean, the Japanese can do that, the Koreans can do that, now China can do it, and they're competing. And the question is, well, why, when China wins the competition, why did they win? Are they doing it better? Are they doing it cheaper? Are they bribing your government? I mean, are they bribing the Indonesian government? Maybe, but the Koreans and the Americans, everybody bribes governments. I mean, it's not only a China thing to bribe local governments to win infrastructure deals. So I think, yeah. So anyway, let me just say the study that I gave you for tomorrow is by an American think tank that is definitely on the conservative side of this. So they're kind of a little bit nationalistic Americans. So it's maybe a little more critical of Belt and Road than really neutral. But I don't know. There are lots of people studying Belt and Road, and it's also early. So if countries default on their debt, lots of countries have defaulted on things, and one thing is that the lending government can just renegotiate the loan and not take possession of the port or something like that. And maybe China will do that. But I think it's early enough, so there's not a lot of evidence yet about whether China will just have to renegotiate. It's sort of like a bank. Like if you're a bank, do you really want to own somebody's property? This was one of my first lessons as a lawyer. I was doing maritime law, and somebody owed our client money, and we discovered that their ship was in the harbor in like Palau or somewhere. So again, I was a young lawyer, so I thought, okay, let's seize their ship in the harbor in Palau. That'll make them pay their debt. So I called a lawyer in Palau, and he said, well, that's a pretty bad ship. So if you seize it, you may end up owning it. And then you'll own a ship sitting in a port in Palau, and you don't want that. So think carefully before you seize that ship. Because legally, to a young lawyer, that sounds like a great thing. But to a more experienced person, like that's not how the world works. You don't want to own a rusty old ship sitting in the harbor in Palau. and China may discover this too. Like it sounds great, but do they really want to own, a railroad track in Tanzania? I don't know. Maybe not. Maybe they'll just have to renegotiate loans that don't perform too. So I don't know.
They are young in comparison with IMF and other Western banks. So I understand China has a very pragmatic approach to investment.
Right.
Maybe down the road, their experience with these ventures show them that may not be a good alternative.
Yeah. There was a lot of concern about Sri Lanka, that they had funded a port in Sri Lanka, and that this was a kind of conspiracy theory that they kind of wanted the loans to fail so that they could possess the port and then use it for the Chinese Navy. So there was this whole national security angle to the story. I have no idea if that's true or not, And how do you really seize a port in another country? I mean, if Sri Lanka really doesn't want China to have the port, Sri Lanka will just bring in the Americans or something. I mean, actually seizing something like a port or a railroad or an airport is not, it may sound easy, but do you really want to do that? So I don't know, but and I'd also be interested in, talking about the details of some of the agreements. When China is investing in Latin America, what do the documents actually look like? Is it arbitration? Are there arbitration agreements? Are they successful in getting arbitration done in China under Chinese law, or are the arbitrations going to be done in Paris or here? What's the governing law? There's a bunch of interesting stuff that it's not super transparent. It's a little hard to get the information, but yeah. So good. All right. So. So tomorrow, I guess we reconvene. I think we might be in a different building, different room.
Okay, the idea for tomorrow is that Professor Mackenzie will join us.
That's Friday.
Oh, okay.
Yeah. So the
For
competition.
discussion.
Yeah, but is it here or in a different room? Okay. Okay. Yeah. Good. Yeah. Okay. Yeah. Let's. Good.
Friday,
Yeah.
professor will be joining us.
Yeah, and if you can, look at some of the newspaper articles that I gave you. Some are quite new. They were Friday's readings originally, but maybe do them for tomorrow. I mean, there's something about Lula and Trump now being friends again. It's like this is just a few days ago. So, I don't know. I'm very interested. I don't know a lot about Brazil, but I just find it very interesting. Never a dull moment. Well, welcome to our world, Trump. So. Yeah, good. All right, well, thanks, and see you tomorrow. I think Luciano said tomorrow something about joining there's another foreign lecturer here from Scotland who's talking about antitrust, competition law, and he talked about joining the two classes. So, not tomorrow, Friday morning. So I think Friday morning we'll join that group. So tomorrow morning will be the day to talk about the sort of current affairs, right? Trying to make sense of Trump and Lula and Xi Jinping and everybody, what's going on today. So today I want to talk about development policy stuff and specifically law and development, in the US, at least, law and development is a kind of separate subspecialty of it's sort of within the broader socio-legal studies. You know, it's law professors who are law professors. But those of us in the group, we don't just write about legal doctrine. We've been interested in how legal systems interact with development, particularly in developing countries, but the lessons can be carried over to any country, you know. So, I mean, in fact, I'm working on a paper now about industrial policy in the US and whether we can do it effectively or not. Because it's the same problem, right? If you talk about industrial policy in a developing country, which a lot of people do, you can take those lessons and say, well, okay, what have we learned from developing countries about industrial policy? Will the US be able to do better? Will it do worse? Is it the same problem? So anyway, but historically, law and development was a field focused on developing countries and their legal systems. So one way to think about the field, which I think is very useful, law and development is a funny kind of legal field for scholars because it involves not just legal scholars, it also involves economists because the economists study development. I mean, there's a whole field of development economics. So you can think about law and development at any particular point in time, like now. What's happening in the world of law and development now? And you can think about it as being these three fields. So, you know, what are the economists now saying about development? What kind of economic policies are they recommending? You have the lawyers, mostly legal scholars. And what do legal scholars think about law? What should law do in a society? And you can have, these categories kind of translate into political terms. So you have some lawyers who are, sort of the law and economics people. They want law to play a more limited role, constrain the government, protect property rights, maximize economic freedom. And then you have the sort of social law people who want to use law as a tool to remake society. So these are just very different views of what law should do. And those views are in the legal academy. And these other people are in the economics world, and they're thinking about economic policy. And then you have the I'd say the institutions that actually do law and development work, and they're filled with people, So the World Bank, they have a whole bunch of people who work on law and development. The USAID, the former AID that Trump is abolishing, AID had a whole bunch of people who tried to do law reform in developing countries, and these are like the practitioners. So they're different from the legal academics. I should put let's put law scholars, the people who write about law. And these tend to be different people. Some of these people are lawyers, but they're not legal scholars. They're more like practicing lawyers who go do stuff. And some of them are not lawyers at all. Some of them are just staff of the World Bank or someplace, or the IMF staff. And if you think about law and development as made up of these three kind of groups or fields, the people that came up with this model said, well, sometimes what you get in the middle is sort of coherent, and there's like a common program. And they decided to call that a moment of law and development. So, hey, good morning. So, they came up with this term moments. We're talking about the field of law and development. And I'm talking about this because I'm in it, and Wisconsin has been in it since the beginning. The faculty at Wisconsin was one of the places that engaged in law, a lot of law and development work in the 1960s, 1970s, along with a couple other American law schools. So Wisconsin was really big. Wisconsin, maybe Berkeley, a couple others, but basically it was the big American law schools. So, and one of my colleagues, whose name you should know, because you're Brazilians mostly, Dave Trubeck was kind of the intellectual godfather of. Do what?
What's in the chair?
Put this in the chair? Okay, sure. Yeah. So Dave Trubeck was in Brazil in the early 1960s, and he was working for the U.S. State Department, and they had a lot of money to aid legal development in Brazil, and that was, and then he came back to the U.S. and he became a legal scholar, and he wrote about law and development and helped create the whole field of law and development. So the idea of the moments is useful for just organizing how you think about this field. So, and it was Trubeck and another guy who came up with this particular model. So the first moment, they said, was this moment in the 1960s. And if you think about the politics in the 1960s, if you think about the world in the 1960s, the legal scholars, especially in the U.S., were progressives. They, not in a, just descriptively, they were progressives. So they wanted law to be a tool. That's how they thought about law. That's how they were educated in the U.S. They were progressives. They were very positive about law. And they thought, well, law should be a tool to bring about social change in society, to make society better. That was their view of law. And that was based on what was happening partly in the U.S. at the time. The government was passing new statutes, the civil rights laws, getting rid of discrimination, racial discrimination, starting to pass laws about the environment, passing laws about various things. So the idea, it was very popular at that time to see the state as this positive force that would use law as a tool to make society better, right? Not everybody believes that. Other people have a kind of Hayek, Friedrich Hayek view of what law should be, and that's much different. It's not a tool, it's a framework that's supposed to be stable, transparent, clear, and you can't really use a framework as a tool. A framework exists, and then people do what they want to do within the framework of rules. But those people did not have a Hayekian view of law. They had a kind of tool view of law. And in economics at the time, a lot of the development economists thought that developing countries needed the state to play a strong role in development. So if you looked at the development economics field at that time, a lot of them believed that the state needed to take a leading role in kickstarting development. So, and a lot of them worked in Latin America. So this guy Albert Hirschman, for example, is a super famous development economist of the time. And Hirschman, I think he did most of his work in Colombia, and then they were connected with the UN. The UN had an economic commission for Latin America, ECLA, or something like that, and they tended to see the economic problems of developing countries as based on things like shortages, bottlenecks, like transaction costs, I guess you would say in modern terms. And so the state could be helpful. If the state could use law as a tool, the state could be helpful in kickstarting development. And some of them thought about I mean, they had different ideas about it. Some thought the state should focus capital in certain areas, kind of pick key industries, and the state should support those. Others thought that they should support everything. But in general, it was a positive view. And in the U.S., you know, we had the Kennedy administration in the early 60s had announced this Alliance for Progress. It was the creation of the Peace Corps, the creation of USAID. It was also the Cold War time, right? So the Soviet Union was out doing stuff in developing countries, and the U.S. government and the Europeans didn't want developing countries to join the Soviet camp. So the Europeans and the Americans wanted to have a positive program that would bring developing countries into sort of the Western camp. And then, you know, and according to Trubeck and Santos, the guys who wrote this, that was a pretty coherent period. There was a lot of law and development activity. There was a lot of funding for it from governments, which helps because these institutions need to be funded and they need to care about law and development. You know, if you're the World Bank, you don't have to care about law at all. You could focus on something else, right? You could focus on health systems or something else. But at that time, there was some commitment from the institutions and the governments to focus on law reform. That moment, you know, what's interesting, and this is relevant for here, a lot of the law reform efforts ended up focusing on legal education reform because the governments didn't want to actually reform their whole legal systems. You know, Trubeck was in Brazil. A little money from the US government was not going to fundamentally change the way the legal system worked in Brazil. So they started to focus on legal education. And their idea was that you needed to change the way lawyers, hi. Their idea became that you needed to change the way lawyers think and judges think. So to do that, you had to reform legal education itself because that's the basis for how people think. And their slogan was they had this idea that American lawyers are pragmatic problem solvers and civil law lawyers are sort of doctrine people. And their idea was to make legal education more American style. And that would, in the long run, that would help support development and whatever. And in Brazil, you know, I mean, I'd say the FGV law school is kind of a legacy of that period. Dave Trubeck knows all those people that started FGV. But it took a long time, you know, Brazilian legal education. The idea that you could reform legal education in a big country like Brazil was kind of a fantasy. And also, I think a lot of the lawyers were not really supportive because it was kind of a criticism of them. You know, it was kind of a criticism of the way things work. And these people, you know, because they, let me just say, this moment, I would say, kind of fell apart by the early 1970s. Things like the Vietnam War in the US, the sort of youth movements in Europe, things like that. A lot of the energy went out of this movement and ideas changed. So, you know, ideas like dependency theory, which became so popular in Latin America. Dependency theory was critical of this stuff, right? Because this stuff was organized by the global community, the Americans, Europeans, and it was basically capitalist. I mean, these people were capitalists, and you know, it was basically market-oriented, but they thought the state needed to help the market function. And if you're not market-oriented, and if you distrust the international economic order, you turn to something like dependency theory. And dependency theory doesn't include foreigners coming in to do this kind of stuff. And also dependency theory was more inward-looking, right? Developing countries should, not worry about joining the international economic order. They were critical of the international economic order, partly, that developing countries would always lose because developing countries would always be exporting primary products like soybeans or, iron ore, and they'd be importing manufactured goods from the developed countries, and that those terms of trade would always be unequal. So the more radical dependency theory people talked about de-linking. Said, developing countries should de-link from the international economic order and develop internally. And I'm sure you know enough about dependency theory. So anyway, this moment kind of died. So I'd say, 1960s, and you could say there was kind of a second moment in the 1980s that was quite different. You could talk about that as kind of the neoliberal moment, right? So in legal thinking, a lot of legal academics started changing their ideas about what law should do and became more free market, more Hayekian. Law should create a stable system of property rights. Law should enforce contracts, and public law should restrain the state. So, law shouldn't, we shouldn't go help countries use law as a tool. We should help countries have public law that controls the state. A lot of criticism of corruption. If the state is active in the economy, that will lead to corruption and rent seeking and all that stuff. So there was kind of a second moment I'd say in the 80s. The U.S., elected Ronald Reagan in the early 80s. England elected Margaret Thatcher. That seemed to be the magic now, was kind of free market neoliberalism stuff. And there was a bunch of activity oriented around that, too. So in the economics field, many development economists became more free market oriented. People like Mansur Olson in the U.S., the positive political theory, a bunch of stuff like that. Or Douglas North, for example, the legal historian Douglas North played a big figure. Yeah. Milton Friedman, of course. Yeah. Yep. Reagan famously said Hayek's The Road to Serfdom was his favorite book, and people made fun of that because they said Reagan never read that book. But it's a short book. It's pretty easy to read, Road to Serfdom. The book? And I make my students read it now. When I teach law and development, I make them read a little section of Hayek because he was so out of favor in the U.S. that it was like a bad word. Like Hayek's like a villain. But Hayek's book was a reaction against communism and fascism in Europe. So, it was written in the 1930s. It was criticizing kind of statist developments, both by fascist governments and by communist governments, who both wanted the state to just take over life. And, so anyway, Road to Serfdom, it's a very idealistic vision of what the legal system could be, and it's very much a framework. And in public law, the government is restricted to only certain kinds of activities. Yep. Right. Yeah, law, legislation, and liberty. He wrote a lot. I don't ask students to read all of it. I mean, it's once you read a little, you kind of get the flavor. It's interesting because he was a fan. Hayek was a little conflicted. He was European trained. He was Austrian German trained. But he became a big fan of the common law. But the common law doesn't really, it doesn't create a clear framework of rules the way civil law in theory does, right? So his claims about law sound more like a civilian lawyer. You know, law should be clear and everything should be written down and transparent. But he was also a big fan of the common law. And I think maybe it was just a fundamental conflict in his thought. But he also thought that, I think he thought that the common law was harder to use as a tool by the government because it involves the judges slowly making the law over time. The common law is not a convenient tool. If you want to use law as a tool to bring about social change, it's not easy to do that through the common law. You can do it through legislation, or you can do it with a new commercial code or whatever. So anyway, you know, I would say the kind of Hayekian moment is important for understanding debates about law and development in Asia, because the World Bank finally did a book that they called Asian and I believe it came out in 1993. I think it's 93 or maybe 92. This is from the World Bank. And the background for that book by the World Bank was that the Japanese government, in particular, had the feeling that the sort of free market, neoliberal, Hayekian stuff had gone too far, and they didn't think that fit how they had actually developed. They didn't think, the Japanese developed, it was particularly the Asian Development Bank and Japanese government. I can't remember which unit in the Japanese government. The story is that they actually funded this research project by the World Bank. And Japan is a big shareholder in the World Bank, and they pushed the idea, you guys in Washington at the World Bank, you need to do a serious look at how development worked in East Asia, because it doesn't fit this Hayekian picture. And they got a bunch of economists who were interested in this, and they did a whole bunch of research about development across East and Southeast Asia. I know less about Southeast Asia, so I focus on the sort of Northeast Asia, Japan, Korea, Taiwan. But they covered like 10 countries in this report, including countries that are just cities, like Hong Kong and Singapore. For me, Hong Kong and Singapore they're not really relevant in the law and development debates because they're just cities. And they relied on specific things like trade flows and things like that. But Japan, Korea, Taiwan were covered heavily in this, and it was funded by the Japanese government. And what's interesting about the East Asian Miracle Report is it's kind of what we would call schizophrenic. So it sort of points in two directions at the same time. So on the one hand, the Asian Miracle Report kind of fits a traditional economics model or traditional economic thinking, because it points out that the East Asian governments were always disciplined in their finances. So they kept inflation low, or they cared a lot about inflation. They kept it low. They kept the budgets of the government basically balanced. The governments didn't, it was like the opposite of Argentina. They didn't borrow money and then default and then borrow more money. There was very little or none of that. They sort of managed the relationship between wages and productivity. They invested a lot in education, which everybody agrees countries should invest in education. Things like that, which there's a bunch of that, and that seems to be basically true about East Asia. And this was a backward-looking report, right? It was looking at economic development in East Asia in like the 60s, 70s, and 80s. And so it written in 93, but the research was done in the early 90s, and it was looking backward and saying, how did East Asia develop? So part of the story fits what you would learn in a standard economics department in college, right? Especially an American one. So you balance your budget, you keep interest rates under control, you keep inflation under control. So that's all pretty standard. You invest in education, you invest in social infrastructure, whatever. The other part of the report, which points in a different direction, talked a lot about the roles that governments played in East Asian development. Because the governments didn't behave in a Hayekian way. The governments in Korea, Taiwan, Japan intervened in specific sectors and supported them with protectionism, with subsidies, with a lot of things. And so, the economists who believe in government intervention, they could point to this report and they could say, look, that's what the East Asians did. The East Asians had industrial policy. They supported certain sectors. That was the key to their success. And then the neoclassical economists could point to the macro stuff and say, no, that was really the key. It was balancing your budget and, macroeconomic responsibility. They weren't like Argentina. They were, So it's really interesting. And, I think both parts of it are true. So it's absolutely true that the Asian governments, especially Northeast Asia, were fiscally responsible most of the time. And my friend, I have a bunch of friends in Taiwan, and I was there a couple years ago, and one of our alumni, we were talking about Taiwan government policy and elections and whatever, and he said, yeah, the problem in Taiwan is that both parties are actually neoliberal. He doesn't really love neoliberalism. He said, well, our problem is both the parties are actually neoliberal. They don't really disagree on anything fundamental. And they don't really disagree on anything at all. They pretend to disagree about nuclear power. So they fight about should they have nuclear power or not. But he said they both actually agree that they should have nuclear power. The left just became, as an ideological position, the left just decided they were against nuclear power. But other than that, they agree on fiscal responsibility, investing in education, limited government, a whole bunch of stuff like that. So, so that part of this thing I think is accurate. If you looked at like the number of government employees, like how many people are employed by the government, Northeast Asia was pretty low. Like it was not, the governments didn't try to drive the economy by hiring a whole bunch of people to work for the government, which some countries do. I mean, and now that Korea is a democracy and they have left parties, sometimes the president's on the left, sometimes the president's on the right. It's a more normal sort of functioning democracy. The last president who was quite left, that was one of his proposals, was we'll grow the Korean economy by raising minimum wages really high, and then the government will hire a whole bunch of people to work for the government, and that will be the way to like increase growth. And a lot of Koreans thought that was just crazy. That's not how they have run their government in the past. And that was partly because it was authoritarian. So the authoritarians were not going to do that. That was not part of their program. So anyway, this East Asian Miracle Report comes out in '93. There's all this discussion about the role of government in the report, but none of the people involved with writing it were lawyers. None of them had any legal training, so they were talking about the role of the state. They were talking about how the state intervenes and the state does this and the state does that. But there were no lawyers involved. So there's almost no discussion in this book. It's a couple hundred pages. there's no discussion of real discussion of law or the legal system. And I think that's partly because economists tend to just look through law. Law is like, what did they call it? It's like a flow-through variable or something. One of them called it. It's like it just doesn't really matter. It's not something that you need to analyze independently. It's,
I think it is what we would call as total productivity of factors.
oh, total factor productivity. TF. Yeah. Yeah.
It is a side that and that is like everything that is in the gross domestic product that doesn't include capital and labor.
Yeah. So the legal
Almost
system
that.
is just.
It's like the residual.
Yeah. So, where I got involved as an academic was writing about legal systems in Northeast Asia development. That was kind of my intervention in this field. Because I knew about it. I had worked in Korea for 4 years as a lawyer and doing economic stuff, right? And I had been in China before that. I was studying the Chinese legal system. So, and I was interested in trade and development. And so when I entered this field, I thought nobody's writing about law in East Asia. Most of the legal scholars they didn't actually do comparative law. They didn't actually know a lot about law anywhere else. They were just at fancy schools and they had ideas that they got from Hayek or they got from American legal realism or something. They just had ideas. So, and there was very little contribution from the comparative law people. The comparative law people were off in this boring world I mentioned the other day where they were comparing Germany and France, and like, who cares? Germany and France are both rich, successful companies. Their legal systems work fine. Who cares? But in this world, comparative law could actually be useful, because if you think that law is more than just a flow-through, thing, then comparative law people could contribute to this debate. Because they know stuff about legal systems. They should know stuff about legal systems in other countries. So, any questions before? I want to talk a little bit more about my own sort of views on things. But does this background make any sense? I mean, one more thing I should say